Hello and welcome to StudyIQ. In this session, we will discuss about the new Direct Tax Code. Direct Tax Code. As we all know, taxes are divided into direct taxes and indirect taxes. And this tax code, the new Direct Tax Code, deals with the direct taxes. And we have already seen the tax code for indirect taxes, that is GST. It is a unified tax structure. So in this lecture, we will be discussing about the proposed new Direct Tax Code. The proposed new Direct Tax Code draft will be ready by July. And in brief, what is the aim of this new Direct Tax Code? First of all, it aims to extend 25% corporate tax rate to all firms, gradually to all firms. It means that the corporate tax rate would be 25% for all the firms, and this is the target of this tax code, and this will be done gradually, not soon, but this will be done gradually. And secondly, this code also aims to provide relief to individual taxpayers. So, relief to individual taxpayers. So, in brief, these two are the main targets of this new Direct Tax Code. In this lecture, let us see the new Direct Tax Code in detail. First of all, let us see what is this and why this is being brought. So, why and what? This new Direct Tax Code aims to replace the Income Tax Act of 1961. The Income Tax Act of 1961. So the new Direct Tax Code will replace the Income Tax Act of 1961. The existing direct taxes, for example, income tax, corporate tax, and other levies like the capital gains tax, etc., they have undergone numerous changes since 1961. And the PM, Prime Minister Shri Narendra Modi, informed the tax officials that all this direct taxes needs changes. So he said that these are all old laws and the economy has changed. Everything in the economy has changed. The structure of the economy itself has changed. So these are old laws and these laws needs changes. So that is the reason why the new Direct Tax Code has been proposed. First of all, in order to cope up with the economic needs of the country. So we have already said that the economy has changed and there has been tremendous change in the structure of the economy. So in order to cope up with the economic needs, there is a need for Direct Tax Code. And secondly, in order to keep pace with the global best practices. So global best practices. It means that some international examples are there. Some countries would have excelled in their tax code. So we have to adopt the best practices in order to get the best outcome. So in order to cope up with the global best practices, a new Direct Tax Code is essential. Another aim of this new Direct Tax Code is to ensure the economy becomes more tax compliant. So tax compliant. When an economy becomes more tax compliant, what will happen? The tax revenue in the economy will go up. So the tax revenue in the economy will go up. This will increase the revenue of the government and will bring down the fiscal deficit of the country. Another reason is to promote new business models. So new business models. See what happens when the tax rate comes down. People will be motivated to do business. So there will be new businesses in the economy. There will be more innovation. More new models of business will be adopted. So when the quantum of the business or economic activity in an economy increases, there are more chances that there will be new models of business in the economy. So this will add to innovation and new models in the economy. Again, another aim is to promote the digital economy as well. Why? Because when there is a new Direct Tax Code, the government can easily bring them under digitalization. So, in order to promote digital economy, see the case of GST itself. GST has improved digitalization in the economy. So, likewise, new Direct Tax Code can also improve the digitalization in the economy. Another advantage is that we can check offshoring. What is meant by offshoring? Offshoring means relocation of a business from one country to another country. This is relocation. Why is this relocation done? In order to avail the tax benefits. So, tax benefits. Usually big corporates, what do? They invest in those countries where the corporate tax rates are less. Why? Because it will increase their profit. So when corporate tax rates are less, the corporates will earn more profit. And as an entrepreneur, every corporate would be eager to earn more profit. So every business will aim to earn more profit, and in order to maximize the profit, the tax rate should go down. So what will the corporates do? They will prefer to invest in those countries which have lesser corporate tax rate. So this will lead to relocation, and this is known as offshoring. So offshoring means relocation of business from one country to another. So one reason can be decreased tax rates. So in order to check the offshoring also, the government can use this direct tax code. So with the introduction of the new direct tax code, what are the aims or what are the expectations of the government? The government expects that first of all the tax net would increase. The tax net would increase. How will the tax net increase? As the corporate tax rate comes down, there will be more investments in the economy. So more investments means more tax returns. So the revenue of the government in the form of tax will increase. Again, the government aims for an equitable rate of taxes for different class of taxpayers. So you must remember the word equitable. It is not equal. What is the difference between equitable and equal? If suppose there is a cake and there are 4 members in the family. If you are dividing this cake into 4 equal parts, we say these are equal. But suppose these 4 members, one is the father, second one is the mother, third one is a kid who is just 1.5 years, and fourth one a grandfather. And you have the same cake, and who will consume more? The father and the mother would be consuming more, because the kid can eat only lesser portion of the cake, and grandfather, who is supposed to be an old person, he also will consume less. And if you are dividing the cake like this, for the father, for the mother, and this for the kid and for the grandfather, this is known as equitable. Equitable means according to that person's need or according to that person's capacity. So the government is trying for a equitable tax rate for different classes of taxpayers. Thirdly, the government is trying to make the businesses in the country more competitive. With the introduction of new direct tax code, how can the government make the businesses more competitive? Let us see. First of all, lowering the tax rate. So lowering tax rate means more businesses will be motivated to do business in the economy, because the tax rate is less. They have higher profits now. So there will be more economic activity in the country. Secondly, by phasing out the remaining tax exemptions. So remaining tax exemptions are also phased out. So by this way, the government will improve the competitiveness of the business in the economy. Next, the government is also trying to define the key terms or the key concepts in the taxation. That is the income and scope of taxation. So the government is trying to give a clear definition for income and scope of taxation. Now let us look at the global picture. If we look at a global scenario, what we will observe is that when the governments try to reduce the corporate tax rate, what happened in the economy or what would happen in the economy is there will be an increase in investment and also an increase in job creation. So from the global examples, this has been proved. Increase in investment and increase in job creation when the corporate tax rate comes down. We have already seen why this has happened. When the corporate tax rates go down, the corporates will have to pay lesser tax. This means more profit for the corporates. So the profit of the companies or the corporates will increase. So with more profit, they will make more investment in the economy. More investment in the economy leading to higher job creation in the economy. If in particular, if we take the US example, in December 2017, the US enacted Tax Cuts and Jobs Act. Tax Cuts and Jobs Act. So under this act, the US government lowered the corporate tax from 35% to 21%. So under the Tax Cuts and Jobs Act, the corporate tax in the country was reduced to 21% from the earlier 35%. And a month later, what happened was that Apple made an announcement that Apple company would invest $30 billion in order to expand the US operations. So only in US, the company would invest $30 billion in order to increase the US operations. So we can say that the announcement by the company was on the backdrop of this Tax Cuts and Jobs Act. So according to that act, the corporate tax rate in the company has come down and the corporates will earn more profit, and this has led to higher investments in the country and new job creation also in the country. Similarly, in India, the new direct tax code also proposes to reduce the corporate tax rate to 25% gradually. So earlier it was 30%, and now according to the proposal of the new direct tax code, it will be reduced to 25% gradually. And two things you must remember here is, first of all, this 25% for all firms irrespective of the profit that they earn. So this 25% will be for all firms irrespective of their profits. And secondly, the word gradually, which means that this 25% will not be implemented as soon as the new direct tax code will be adopted. No, it is not like that. As the revenue collection of the government improves, the government will do this. So when the revenue collection of the government increases, the government will reduce the corporate tax rate to 25% for all firms. But from the year 2018-19, from the financial year 2018-19, this 25% tax rate, the corporate tax rate, will be applicable to all firms whose sales are less than 250 crore. So from 2018-19, this 25% corporate tax rate will be applicable for all firms whose sales are less than 250 crore, and for all firms gradually as the revenue collection of the government improves. So for the time being, it's for the firms whose sales are less than 250 crore. Coming to individuals. Individuals have to pay personal income tax. Individuals. Does this direct tax code have any impact on individuals? Let us see. So the direct tax code targets or aim to make personal income tax more progressive. So progressive, what is the meaning of progressive? What is meant by progressive tax? Under the progressive tax system, what happens is the tax rate increases with an increase in taxable amount. So when taxable amount increases, the tax rate also increases. Or we can say that the tax rate progresses with an increase in taxable amount. When there is more taxable amount, the tax rate will also be more. And according to the direct tax code, this is trying to give some relief to people in the 5% and 20% tax slabs. Now let us see whether this new direct tax code, the proposed direct tax code, whether it is a new idea in the country. No, it is not a new idea. This has been proposed by the previous government also, but this was not passed in the previous parliament. Here you should remember that the present government has adopted or incorporated all the new ideas from the previous proposals. So let us see what are those things. First thing, decrease in corporate tax rate. We have already discussed what is a decrease in corporate tax rate and how it will impact the economy. Secondly, phasing out tax exemptions. So phasing out tax exemptions. Third, GAR. G-A-A-R. General Anti-Avoidance Rules. What is General Anti-Avoidance Rule? These are the laws to curtail the tax evasion. So General Anti-Avoidance Rule tries to curtail the tax avoidance. So this aims to check the revenue laws of the government. So revenue laws by the way of avoidance. So when taxes are avoided or evaded by people, what happens? The revenue of the government will come down. So this will lead to revenue loss for the government. So GAR tries to check this revenue loss. Thirdly, place of effective management rules or POEM rules. POEM stands for place of effective management. So what is the purpose of these rules? This rules tries to determine the residence status of corporations. So residence status of corporations. They determine residence status of corporations. Let us see this in detail with an example. If suppose the effective management of a company is in India. So if the effective management of a company is in India, this company is treated as an Indian resident. So this company will be treated as Indian resident, and as a result of this, what will happen? The global income of the company will be taxable in India. So the global income will become taxable in India. So according to the place of effective management rules, if a company's effective management is in a particular country, the global income of the company will be accounted in that particular country, and the company will be regarded as the resident of that particular country. Let us see if there is any criticism for this direct tax code. So the only criticism for this direct tax code is that it will be difficult for the businesses to cope up with the structural changes. So this is a structural change. If direct tax code is implemented, there will be a structural change for the direct taxes in the economy. So critics say that this structural change would be difficult for the businesses to cope up with on the backdrop of GST. GST has already restructured the economy, and economy is only reviving out of the effects of GST, and again direct tax code will add on to the burden. This is the only criticism.